Welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. The Reserve Bank of India recently released guidelines outlining the amount of loss that you as a customer have to bear in case there is a fraudulent transaction linked to your account. Now, the new rules limit a customer's liability and link it to how quickly he or she reports this fraudulent transaction to the bank. That brings us to the theme of this week's show, knowing our rights and our responsibilities as a banking customer and understanding the entire grievance redressal mechanism. Joining me on the show this week is Adil Shetty, CEO of BankBazaar.com, and Mr. A.C. Mahajan, who is the chairman of the Banking Codes and Standards Board of India. Now, just for our viewers, this board is an independent and autonomous body comprising of over 70 scheduled commercial banks in India, and it was set up by the RBI to ensure that banks provide fair treatment to their customers. So, gentlemen, thank you so much for joining us on the show this week. And Mr. Mahajan, it's a pleasure to have you here because you directly represent the customers' interests. And I suppose that's exactly what the mandate of this board is, isn't it?
Yes. And before that, let me clarify you. Before that, let me clarify you. Not only the 70 scheduled commercial banks, regional rural banks 47,
and
the urban cooperative banks are also members of BCSBI.
So basically, we're talking about almost 150 banks which are members of this body.
No, as of now, 129 banks are members of BCSBI, which represents 98.5% of the banking industry customers.
Okay.
So we represent almost everybody in the country.
So you tell us, let's start with the basic broad question. Do you think that banks are being fair to customers and the codes and standards that you've prescribed, they are being adhered to?
Banks are fairly complying to the codes. I don't say they are 100% complying. We are monitoring the implementation of the codes every 18 months. And the recent survey which has been released about 2 months ago has revealed that the compliance level on an average in the banking industry is 78%. So banks are complying from 62% to 94%. So there are banks who are in the lower range, there are banks who are above 85 also. So the compliance level, though, is not very satisfactory, but it is improving year by year.
Okay, that is good to know. We will in fact come back to these broader issues about what kind of compliances do banks have to keep in mind when it comes to their customers. But let's get down to the first subject at hand, which is this guideline on the concept of limiting a customer's liability in case of a fraudulent transaction. Now, this was within the realm of discussions for a long time, and finally the RBI has come out with the official standards and rules. So, Adil, explain this to us. I've gone over the notification, and it seems to be placing people in different buckets, depending on, first of all, whose fault is it? Is it the customer's fault by simply giving away the ATM PIN or password? Is it third party? Is it the bank's fault? So there are several categorizations here, right?
Yeah, absolutely. So broadly, we see this as the respected regulator saying that a lot of people are going online. Digital is picking up. At Bank Bazaar, for example, it's 17 million visitors a month. So people are moving online, and the RBI wants to give confidence to people, saying transact online with certain guidelines and you can rest assured your liability is limited. Now we come to a very interesting point of the three buckets. So first of all, right, there is a bucket where it was the bank which is at fault. There is a bucket where it's a third-party breach, and there is a bucket where you're at fault. Now, in the bucket where the bank is at fault, zero liability.
Bank has to foot the bill for whatever loss you might have incurred.
If it's the bank's fault, zero liability. If it's a third-party breach, very interesting, there are three sub-buckets.
Yeah, and these sub-buckets depend on how quickly you have reported that fraudulent transaction to the bank. If you report it quickly enough, you don't get such a bad hit, right?
Exactly. So 0 to 3 days, if you report the fraudulent transaction because you got the SMS, zero liability. 4 to 7 days, liability is between 5,000 rupees to 25,000 rupees, depending on whether it's a savings account, whether it's a credit card, and so on and so forth. After 7 days, right, the bank's board will take a decision as to what your liability is and communicate it in the policy document, right? So three separate buckets, very important to be aware, where the bank is at fault, no liability, wherein it's a third-party breach. There are three buckets of 0 to 3 days, 4 to 7 days, 7 days and above. And lastly, where you're at fault. You should not be giving your credentials on a phone to someone. If you do, right, you are bearing liability until you report it.
Yes.
Post which, zero liability. So the RBI is putting a very clear scheme saying, hey, transact online with confidence, right?
Yeah.
But be aware that these are the buckets you need to fit into. So have the awareness of what's happening in your account.
So for the sake of clarity, I'll simply go over that bucket depending on when you're reporting the transaction. If you're reporting a third-party breach, a transaction that has happened without your consent within 3 working days, then again, there is zero liability. If you are reporting between 4 to 7 days, then as Adil explained, the numbers could vary between 5,000 and 25,000. And just to sort of talk about the different categories here, for a regular savings bank account, it is 5,000. For other savings banks account and credit cards where the limit is less than 5 lakh rupees, there the damage can be up to 10,000. That's the kind of loss you will have to bear. And all other cases, all other savings bank account or credit cards where the limit is higher, above 5 lakhs, there the damage that you might have to bear can be up to 25,000 rupees, but no more than 25,000. Mr. Mahajan, sounds like this is fair for the customer. I mean, how do you think sort of banks will go about implementing this?
The bank has to implement. There is nothing like that. How, why, they, and when. As regard that 5,000, let me little clarify. It is not a normal saving account. They are called basic saving deposit account, which are called used to be called earlier no frill account, or where the simplified KYC norms have been used.
Sure.
So there the loss has been kept at the minimum 5,000 rupee. The normal savings account are the accounts where turnover is less than 25,000, average balance is less than 25,000 or so. There it is 10,000. As I have told you, in our BCSBI code of 2014, we have also provided for this. But there we have kept the liability uniformly 10,000.
Okay.
So banks are aware where the customer is not at fault, the liability is on the bank. And the banks are supposed to honor that liability immediately. But where the customer is at fault, or he has shared his payment credentials, or etc., or somehow his system is not up to mark, the liability has been kept at 10,000. But there we have not put that clause of 3 days or 7 days or something like that. But Reserve Bank has done a lot of clarification in this recent circular. And I'm sure the bankers and customer both will be happy in implementing this circular.
Have you come across any cases where, you know, the first bucket, where the bank is at fault, bank's internal systems were not robust enough? So in that case, there is zero liability as a customer. But how to prove that it was actually the bank's fault?
The banks has to, many places the banks has been found wanting in sending the SMS. It has been proved. So where they have failed in sending the SMS of such transaction, the loss has to be borne by the bank only. It is the duty of the bank, it is a mandatory to send SMS for all credit card and interbank or all other electronic transactions.
Absolutely. In fact, the RBI circular on this is even asking now banks to go ahead and come up with a facility where you can hit a reply button to the SMS that you get. When that SMS tells you that this amount has been debited from your account, if it is a fraudulent transaction, if you've not authorized it, the RBI wants the banks to have the option of replying to that message, which doesn't exist as of now. So I guess that will make it a lot more simpler for people out there.
Yeah, it's a superb use of technology, right? All of us today are used to receiving messages when we swipe our card or withdraw from an ATM. All you need to do is pay attention and you can reply to that SMS. Like Mahajan sir said, it's mandatory now. So you don't have to go hunt somewhere else.
And try and get on an IVR.
Try and get an IVR. You just have to reply to the message. And I think what's really interesting, right, is the regulator is taking into account the rapid development of what's happening with technology and using it to protect the customers by making it as simple as replying to an SMS saying, you know, this is not my transaction.
Absolutely. So, well, that clarifies what you need to do the moment there is a fraudulent transaction with respect to your bank account. But that's not all, right? It's a big universe out there. As a bank customer, do you know your rights? Are you aware about RBI's charter? If not, stay with us because we will tell you all of those details after the break.